So anything you're communicating, I never met you people, I never talked to anyone. Some of them are called me for some queries, some of them sometimes will call for some
recording in progress.
Other than that, I do not talk to any student so far or any friends like you so far. Anyway, this is the platform I make use to interact with you. Meantime, I take one session also so that I don't waste your precious time. Sunday is very precious for everybody. At that time, I thought I'll make use to talk to people sometime and I'll take the session. As you know, as for the shaking today, you have business environment session. I thought, why don't I take this session and I'll take some topic related to your course only. I thought of taking accounting for managers. If everybody will wish, I will take the topic. Accounting for managers is the MMPC 004, one of the important subject, one of the core subjects where all the MBA students who join the IBNOU have different streams, different programs they might have completed. Some of them are, most of them are whom I interact with so far. Those are coming to the center. Most of them are engineering background. Some of them have some gap after their studies, and some definitely are having commerce background, no doubt in that. Some of them are having some medical background. So all the students are there. So and for them, maybe this subject looks very difficult. So I thought let me discuss with the people, and if you permit me, I will take this concept called accounting for managers. If you interact with me, if you say yes, I will just discuss some topics in accounting for managers.
Yes. Yes, sir. Yes, sir.
People are
Yes, sir. Yes, sir.
Four.
Yes, sir.
5.
Yes, sir.
6.
Yes, sir.
Good. I start slowly. They will also get impressed. By default, you have to see whether our coaching is good or not, whether what we are giving input, whether it's right or wrong, or whether it is, to reach into your math. It is, you have to listen to the classes. Anyway, we'll start. The accounting for managers is one of the important paper in your MBA in the first semester, followed by this I have a continuation of the second semester title called financial management. The third semester, when you take specialization to take finance as a specialization, this particular accounting for managers very gives a very important role and plays very important role for your rest of the courses. In every semester, you will have one subject related to the finance. So accounts and finance go hand in hand. So those who are very good in the accounts and those are for the first time you are going to understand, or for the first time you are going to learn. So be a little more attentive so that it may be useful for your throughout the fourth semester of your course. Now to start with accounting for managers, most of you are common background. If you share with me the meaning of accounting, it will be nice. Anyone can say from your side meaning of accounting? According to what you know, just to tell me. I need not want any definition exactly from the book or anybody, some author's book. So from your side, you just tell me the meaning of accounting. Let me see so that I can pick up from there.
Generally, accounting will write day-to-day what has expenditures and what we have credits regarding the financial matters. Maybe the profit and loss of the expenditure done by the business in day-to-day life.
Any other answer?
Tracking of spending and expenditures and recording to the account books.
That's very good. I'm a lay person, so I may not be knowing so much what you are telling. So if you tell me in simple language so that I can understand. The terms what you use, some students use expenditure, some students use income. So I'm a lay person who don't have any background of this technical terms what you use, but that person what you say exactly in simple words. Assume that I don't know anything in finance or accounts, and you need to convince me something related to this concept. So what you will see? Because most of you perfectly answers it, but you are used some technical terms which I may not understand and which people cannot understand. So for a lay person, how you will say? A simple word.
You just note down what you spend.
What you spend, sir?
What you spend, you write down, and what you earn, you write down.
Okay. What you spend, I write down, and what you earn, that you write down. Okay. Any other answer? But still, that was still more. It is something I don't know. Something while you're telling to write down expenditure, something sometimes you're telling write down some income. But still, I'm little confusion. I don't exactly what is the expenditure, what is the income. So how you can say? Any simple word, come out can make an attempt. But what you're saying is perfectly correct. I'm not denying it. But I am a lay person, I don't know anything. So that's what I'm just finding out. Any simple, some more words I can find from you.
It's a process which we invest in the business and also what we get a outcome, that is nothing but profit. It's a process of maintaining records which will be we will invest in the business and also we gain profit, and also we will come to know the stage of our business or organization. For example, our business is in profit or it's in loss.
Sir is very extreme level. Good sir, next sentence. Very good sir. Any other answers? Some more?
Accounting is actually the process of keeping track of the numbers.
Keeping track of numbers. Any other answer?
The money spent and the money earned for a business.
And goes out. Good. And since given an answer, recording money comes in and goes out. Good. Any other answer? Right, sir. Boring, sir. We started early morning where you started asking only we don't know, that's why we joined the course. And immediately you are only asking the questions, what is this, sir? Already you have taken our 15 minutes of time. And from the time you started, almost 4 minutes you are discussing with us only. And we are telling us to speed or not satisfied, so don't waste our time, sir. Please start. In the mind wise, I can hear some of the who are in the meeting. But anyway, I'll just tell you, or you may correct if I wanted to correct. See, accountancy is in simple words, explanation about the finance. That's the only one word. Explanation about the narration about the money of any institution or any organization or about yourself. It is a narration about the finance, giving explanation about the money. That is one simple and dictionary word I thought I'll share with you. With this, we'll go about and we'll start in the class. Accounting, starting to say, is analyzing and classifying and recording and summarizing the day-to-day business transaction. The only one objective of Syed was telling about the business. Syed, what is the objective of any business organization, Syed?
Earn profit.
Any one objective of a business organization?
To earn profit.
Understanding the business better.
Understanding the business better, very good. Okay, right, very good. Now, I will talk to you one important thing. The one and only objective of finance. Can anyone say one more chance I'll give you?
Sir, growing the business.
Growing the business, okay. Growing the business. Next one.
So you
Input the data as actual.
Now, what is the only one objective of financial accounting? Now, you are starting accounting, What is the purpose of accounting? What is the purpose of explaining giving narration about the finance? Or as I said, analyzing, classifying, recording, summarizing the day-to-day business transaction. The meaning, simple word meaning is not accountancy. Now, what is the object of this accountancy? If you are giving explanation about the finance, by giving explanation money, that is called financial accounting. Now, can anyone share with me what is the one and only objective of this financial accounting?
To calculate losses.
To make to
Not make the losses.
Okay, next page. Okay. Now the
Recording transactions.
recording the transaction. Very good. Any other answers? Because most of you submitted your assignments. Everyone submitted your assignments. The assignment, the first question itself, that one only was there. What is the objective of financial accounting or financial some word was there, right? And some of them are written 10 to 20 pages, and when they used to come and submit to me, I used to see that MMPC 004 only what they have written. And that may be an important question in the first topic itself, and you have done well. But now when I'm asking each one, I'm telling one answer. Anyway, I will tell you, and I will start. Now, the one and only objective of financial accounting is to measure the financial performance of an organization. Only one objective. By taking the records, by making the historical record, as I said, by giving the explanation, by narrating about the finance, the objective is to measure the financial performance of an organization. Again, I can read your mind voice, sir, why you have to measure the financial performance of an organization. Right? The only objective I told to measure the financial performance, whether we earned a profit or whether we suffered a loss for a particular period of time. Now, how we are going to measure the second thing? So we will measure this financial performance by preparing two statements. One is an income statement, another one is a financial statement. The income statement, now latest trend, they use the word called income statement as per the Companies Act of 2013. And as per the IFRS standard, they will use the word called income statement. Income statement in earlier classes, you would have studied the title called trading and profit and loss account, which again will be expected for 20 marks this semester. 20 marks, there will be question wherein you are right trading and profit and loss account. You have to prepare, and therefore one definite one question will be there. So therefore, the financial accounting purpose, the objective is to measure the financial performance of an organization by preparing an income statement and by preparing a financial statement. Now, by how we prepare the income statement and financial statement is second question. Now, why we need to prepare income statement and financial statement? Can anybody say the answer? Why do we need to prepare income statement and financial statement? In your words, why we need to prepare trading and profit and loss account, and why you have to prepare balance sheet? I can read your mind was again, sir, to know the profit, or to know how much we earn the profit, or to know how much we suffer the loss. Fine. Okay, even further you go, because some of them are working in corporate, some of them are taking the finance to the background. They may see how much to invest and what we invested, or we are getting the exact return, or the return what we are getting is in par with our investment. Some more people further ahead, they will see, sir, our payback period, within how many years will I get back what I invested? All this, characteristics and all fine. But at the end of the day, there is one word called finance. What is the purpose of doing this one? Why we have to prepare profit and loss account? Why you have to prepare the balance sheet? It is just to know the income position or financial position, or beyond that, anyone answer is there. If anybody can share any answer which you know, I repeat, if there is any beyond this knowing the income position and financial position, if there is any purpose of this particular income statement and financial statement.
Sir, to compare our standing with other competitors.
No, ma'am, a little more loudly can you say?
Yeah. Ma'am, sir, to compare our standing with other competitors, how we are performing in the market.
Very good, competition. Okay, I'll add. One is to know earn the profit, or to know suffer the loss, or to know how our competitors are doing their business, just planning to compare your performance with other performance. Next one.
To take decisions which is good for a company.
Which one, sir?
To take good decision to make organization profitable.
Sir, you don't know this, I cannot hear you. Sorry.
To make decisions,
To
to make company,
to make decision,
to make company or organization profitable.
or to make company or organization profitable. That's what our ultimate. Okay, how will we make that? Next step.
To know the health of the company.
To know the health of the company or health of the company. Okay, next. Alright, so I will tell you whatever the things you do at the end of the day, why you are preparing income statement and financial statement is decision making, to decide to be or not to be, whether to run the business or whether to close the business. That is the one and only objective, that is decision making. Decision making is the only objective of preparing this income statement. You may compare, because if I say, see, throughout this 5 years of studies, if you compare from 7 years of study, from 11th to 12th, 3 years of UG and another 2 years of PG, those who are taken finance, those who are taken commerce, those who are taken MBA as a specialization, to summarize all the 7 years of study, you would have studied more than 70 to 80 courses in each program. In each program, I mean, in the MBA only, in the MBA only are going to study 28 courses. Then UG, every semester, 6 you are studying. Compared to the almost 7 courses you are studying, I mean, 70 courses you might have studied with different names, say for example, financial accounting, corporate accounting, accounting for business combination, marketing management, statistics, income tax, there are so many subjects you might have studied. At the end of the day, summarize all these subjects, the only one objective of studying all these things is profit maximization and wealth maximization. How will you maximize the profit of an organization? How will you maximize the wealth of the organization? Profit maximization, sky is the limit. Sky is the limit. You don't even bother what is your investment. You don't even care for how much you invested, but still you expect more profit. The more the profit you earn, less the satisfaction you will have. Because that is the concept where the sky is the limit. That's why I'm using the word called sky is the limit when you are planning to calculate and measure your financial performance. Keeping this as the background, not only you need to satisfy, maximize the profit of an organization, but also you have to maximize the wealth of the investors. Those who believed in you, those who invested in your business, at the time of beginning, now you may not be number one in the market. Now you'll be having big brand, now you may be a big reputation, maybe having patent rights, maybe having goodwill. The best brand you may be having. But the founder who has invested money, again you have to satisfy. Today investor will demand this much of percentage if you give return, I will invest in your business. Otherwise, there is option, there is a competitor, there is other person whom they are doing better returns, there I will go. So you need to satisfy the investors also. So as an organization, as a basic accountant, as a chief financial manager of an organization, as a decision maker in your organization, it is you who to decide what is the return which you are going to give to the investors. With that investment, just 1 minute, I have to. This kind excuse me because today is Sunday, the students are also coming, working in submit assignment. So I'm just talking to them, just avoiding them to come back here. So I'm sorry. Right now, I was just talking to you. You need to make the investor also happy. So keeping these two objectives in an organization, if you concentrate only profit, profit, profit making is good, but at the end of the day, you have to make a decision. So decision making is very, very important too. The decision should be made on your financial performance. So therefore, we are preparing this final accounts, or we are preparing this financial accounting, or we are making the books of accounts to measure the financial performance by preparing an income statement and by preparing a financial statement. By preparing these statements, we will come to know our financial position. So based on this financial position, we need to take a decision. Therefore, the one and only objective of your financial accounting is decision making. If I just to give you 2 minutes, I just one student is there. I mean, one professor has come. I just want to start hand out some assignment. Can you bear with me for 2 minutes?
Recording stopped.
Yes, sir. Please carry on.
Yeah, no problem.
The way you should ask the question, I should not tell the correct answer because I should not know the answer. So like that, you should ask the question related to accounts and finance. Don't ask anything related to yesterday's new movie which is ready, which even I don't know the name. Yes.
Recording in progress.
I'm given people are very good in questioning, so I'm telling you to ask me the question for which I should not know the answer, for which you should tell me the answer. Yeah. Come on, friends. Are you there? Everyone?
Yes, sir.
Yes, sir.
Come on.
Yes, sir.
Yes, sir. Please, sir. Tell your questions. I don't want to answer. Can you ask me the questions?
Sir, why finance is so difficult, sir?
Why finance is so difficult? Super question. Why finance is difficult? Right. I will tell you. Next. Very good question you asked. We will try to say to satisfy with the answer. Somebody asked one beautiful question. Why finance is difficult?
Sir, because I studied other subjects also, but I found accounting and finance quite difficult for me to study.
Super. So you need to ask the question in terms of academics, not in terms of the real finance. I thought you were asking about real finance. I'm getting so much salary, I'm not able to maintain it. And why this finance is so difficult? I thought in that sense, but you're asking in terms of academics, that you studied your materials, from that you're asking the question, right?
Yes, sir. Yes, sir.
Yes, very good, very good. By the time, by next 2 hours, you will open your mouth and you will say accounts is the best subject, sir, very easiest subject. I will tell you why it is. You are going to open your mouth again, you will say, sir, this is one of the easiest subjects, sir, which I never come across. And that much guarantee I give. That is the answer for each other. Next question. Quick.
Sir, what is difference between accounts and finance?
Very good, super. Right, very good question. Next. Yes, I will answer you. Deepak is asking, sir, what is the difference between accounts and finance? Very good question. I will say. That also I will tell the answer. Next one.
So, what is the difference between cash flow statement and profit and loss statement, sir?
Super, excellent. Next. Only 4 questions, but the 4 questions you only know the answer. And I'm going to take the answer from you only. I thought some difficult question you ask me for which I don't know the answer. What to do? Right. Okay, now let us see where I was stopped. I was just talking to you. The purpose of financial accounting is for decision making. To be or not to be. Whether to run the business or whether to close down the business. That is the one and only objective of any organization, every organization, irrespective of the nature and the size of the business. Irrespective of the nature and size of the business, every organization would like to know their financial performance, bottom line, for decision making. In the process of decision making, we need to know our financial performance. To know the financial performance, we need to prepare the accountancy. In the process of preparing accountancy, we should know the meaning of accountancy. Accountancy is nothing but analyzing, classifying, recording, and summarizing the day-to-day business transaction. You ask what you mean business. Business in ordinary course of its business, or business in simple word, buying and selling of goods and services for making profit. Other again, Chandra will be running his mind, what do you mean by goods? Everything can be called goods. Right? So, like that, one by one, if you go, there is the, for time being, I will just tell you, the purpose is to record the day-to-day transaction. That is, to record the day-to-day business transaction. I'm getting lack of disturbance. Sorry. Okay. Now, so to measure the financial performance, this is the decision. So we have to prepare final accounts. So accounting is to measure the financial performance. To measure the financial performance, we are preparing two statements. One is income statement, another one is financial statement. The income statement is prepared to know the income position, and financial position is to know the financial position. How we are going to prepare these two? By maintaining the books of accounts. For that, we use one word called bookkeeping. So bookkeeping is an art and science of recording the day-to-day business transaction. The bookkeeping is further classified into single entry system of bookkeeping and double entry system of bookkeeping. At present, as per the Companies Act of 2013, there is a demand, and as per the IFRS standard, it is mandated that every organization should maintain their books of account under double entry system of bookkeeping. Now, this bookkeeping, how we have to maintain the bookkeeping? The bookkeeping can be maintained by adopting the principles of accountancy. What do you mean by principles of accountancy? Can anyone say it's a simple word? What do you mean by principles of accountancy? What do you mean by principles of accountancy? Anybody in the class?
Rules to follow in accountancy.
Yes, sir. Rules to
Follow.
Accountancy. Any other words? Any other answers?
So certain conventions have been created by accountants throughout. Those conventions are principles. Like for example, financial year, every year you have to close the accounts.
Okay. Now I will tell you, principles of accountancy means it is a universal language. It is a business language or universal language. Any businessman, every businessman should follow. In your simple words, as you said, everybody said, those were said, now including Sahib, you said perfectly the answer. But in simple words, it is a guideline, a set of guidelines to be followed universally. Every businessman should follow universally. In the sense, the moment I open the books of accounts, any business organization, right? The moment I open, I should understand this is the principle, this is the guidelines they might have followed. They cannot go out of the guideline to say that is different. So every businessman should follow some set of guidelines which is given by generally accepted accounting principle. It's called generally accepted accounting principle which should be followed by every businessman. Again, you may be expected for 20 marks about writing small things about the generally accepted accounting principle. You need to write something related to what you mean by generally accepted accounting principle. Okay. Now, this principle is nothing but a universal language. Now, this particular universal language further classified into two types. One is accounting concepts, another one is accounting conventions. Now, what is the accounting concepts? You know the meaning of accounting, I told in the beginning itself. Accounting is nothing but analyzing, classifying, recording, and summarizing the day-to-day business transaction. That is the meaning which you are going to follow throughout your account whenever you are maintaining the books of accounts. Number one. Number two, what is the concept? The accounting, I told the meaning. What is the concept? Anybody in the group, in the class can say the concept? Accounting concept.
Consistency in recording the data. Consistency in recording the data.
Consistency in recording the data. We'll see, sir. We'll see what is taking. Next one, anybody else?
The double entry system.
Double entry system. Okay. Next. Any other answer? Okay. I will tell you. Accounting concepts means analyzing, classifying, recording, and summarizing the day-to-day business transaction. Concept means assumption. Taken for granted. Assumption. So accountancy is prepared based on some assumption. The moment if I ask you to assume your setup, your organization setup, what are the things come to your mind, you know. The moment I tell you to go back and recollect your memories, I mean, assume your classroom means you know what is the classroom setup. So there is something which is called assumption, taken for granted. So for example, when you are maintaining the books of accounts, when you are making the books of accounts, there is the first and foremost assumption, business entity concept or business entity assumption. What in the business entity assumption means, when you are starting the business, when you are maintaining the books of account, here the individual is different, the organization is different, irrespective of anybody for that matter. Even a small hawkers, peddlers, street vendors, or say, for example, your Wipro chairman or your Infosys chairman, irrespective of they are the founder members of the organization, they are the first investors of the company, but they are different and their organization is different. What I mean to say means, when you are investing the money, you are investing into the business. Here, business is different and the individual who invested the money is different. Right? So you cannot connect the money to withdraws for his personal use, you cannot treat that as a business expenditure. Or if he draws money for his business, you cannot say that is a personal expenditure. So business means whatever the expenses, whatever the investment you are making, that is entirely exclusively meant for business. From that business, even though you are invested, one A, B, C, you invested the money, they will have a right in the business. But as per the accounting is concerned, once they invest the money, they are become the proprietor, or they become the CEO, or they become the owner of the company. Company is here different, this owner, the CEO is different. Even though he is investing huge money to run the business, yes, definitely. But still, it can be called different, it is not different. That's why business entity concept. There's an assumption that here business is different and individual is different. Right? Even though the individual running the business overnight, the individual is not there. Due to natural calamity, due to something, the individual dies, but still the business will exist. That is called business. So say for example, the chairman of Wipro, chairman of so many people are there retired. They are not taking care of the administration part of the business, or they are not part of the business, but still the business is running. Because they started 25 years, 30 years back they started. If they are not there now, but still they are board members, they are there, but not so much taking initiative in the business decision. Why? Because they are different and business is different. That's why they use the word of business entity. Here, individual and business are different. The first assumption, the moment you maintain your books of accounts. When you open books of account, the first assumption should come to your mind is, here the fellow who invested money is entirely different and the business is entirely different. If he draws money from the business, if he makes use of money for his personal use, that can be treated separately, that can be not part of his business expenditure. Right. Number one. Number two, money measurement concept. In a business organization, anything, everything you should measure in terms of money. Without money, if you do anything, that cannot be called as a business. That can be called as a barter system. That can be called any system which you name. But it cannot be called as a business. Money measurement. So when you are doing the business, there was the olden days, there was a barter system, later on some other system, so many systems have changed. Now, recent trend is you are doing business for the sake of money. Whether you earn the profit, whether you suffer loss, whether you earn a huge money, whether you suffer that little loss, that not makes any problem, but you should involve the money. The sense, say you are a big organization, you have 1,000 computers you have in your godown, 100 machineries you are having, 1 lakh, 100 furniture are having, 1,000 machineries are having. So this cannot be recorded. So I have 1,000 machinery, 2,000 computers, like that you cannot enter in balance sheet. Or you cannot measure that in terms of in profit and loss account. You have to convert that 100 computers what you are having in terms of money. 1 computer is equal to 10,000 rupees, so 100 computers. So 10,000 into 100. You may have a laptop, you maybe have furniture, you maybe have some machinery, you maybe have 100 buildings. This can be converted in terms of money value, not in terms of quality, not in terms of quantity, but in terms of money. That is called money measurement concept. The second important assumption, when you are maintaining books of accounts, when you are writing books of accounts, right, you should measure that in terms of money. Suppose you purchase machinery, two machinery purchase, X machine, Y you purchase, that you cannot write you purchase two machinery, purchase account debited to machinery, something X account to machinery. No, that machinery value should be written. The machinery, one machinery is reported 10 lakhs, so two machinery is 20 lakhs. So machinery account is 20 lakhs, like that you are right. That is the meaning of money measurement concept. In an organization, the second important assumption is anything and everything you should measure in terms of money. That is called money measurement concept. Next, third and very important assumption, going concern concept. This is also another assumption. First assumption we discussed about the business entity concept. Second one I discussed about the money measure concept. The third one we are taking up the going concern concept. What do you mean by going concern concept? This is also an assumption. Going concept is an assumption. What is the assumption? That the day when you started the business, irrespective of the nature and the size of this, you may be an author, you may be a peddler, you may be a street vendor, you may be a tea shop owner, you may be a bakery owner, you may be a multi-millionaire, may be any size and the nature of the business. The day when you are starting, you start with the intention of running the business for infinite period of time. You run the business for infinite period of time. You cannot define the time. It may be 1 year, it may be 2 years, it may be 6 months. In the course of business, in the course of ordinary business, you may earn a profit, you may suffer a loss, there may ups and downs. But the logic, the basic intention is to run the business for infinite period of time. Why I am using infinite period of time? And next minute I will tell you, 1 or 2 minutes, I will tell you why infinite period of time. So, dear friends, this is one of the important concepts of principles of accountancy. Why I will tell this? Why concern concept is very, very important aspect, a very, very important concept in accountancy. We discussed about money measurement, we discussed about business entity. Now, this I am talking to you, which is very, very important. This is the base for all the assumption what we are going to do. The only reason is this particular going concern concept made a foundation, classified so many things into the business. Number one, this particular going concern concept talks about the business will run for infinite period of time. Infinite period means we don't know. Maybe for 1 year, maybe for 6 months, maybe for 10 years, maybe for 100 years, maybe for 1,000 years. The time is indefinite. Having said that time is indefinite, as a businessman, when you are trying to invest money into business, the only objective, you and I know that to earn the profit or suffer the loss, to measure the profit. So in the process of measuring the profit, when your business is running for infinite period of time, how will you measure? First important question. As I told you, going concern concept means the business will run for infinite period of time. Having said the business will run for infinite period of time, okay, now you are a businessman, how can you measure your profit or loss? Important question. So therefore, number one. Number two, the important question is, when the business is running for a long period of time, you need to classify so many things. Number one, expenditure. Number two, your income. So when you take up the expenditure, there are 3 types of expenditure. One is the capital expenditure. The second one is the revenue expenditure. The third one is deferred revenue expenditure. The first one is the capital expenditure. Why I am telling you going concern concept is, we are just talking about preparing income statement. We are talking about preparing statement, profit and loss account. If you ask anybody and everybody, I don't think so everybody will be in a position to give me a correct answer. Okay, what type of expenditure you are taking in income statement? If anybody can say me what type of expenditure you are taking in income statement?
All incomes what we are getting?
So, sir?
All the income which is coming.
No, what type
Maybe
of expenditure you are taking in your income statement? You are preparing income statement, or preparing trading and profit and loss. What are the types of expenditure you are taking?
So revenue.
Revenue expenditure, very good. Next one.
Debt.
Debts, okay, next one. Okay.
Receivables.
Which one, sir?
Receivables.
Okay. Now, much delay. Shivi, ma'am, what is your name, madam?
Cost of goods sold.
What is Shivi?
Sir,
What is
Shivi, sir.
Shivi? Okay.
Shivi.
He told very beautiful answer that we are recording revenue expenditure in income statement, sir. That is one of the important points you have to remember. Everybody talking about income statement means, okay, knowing the profit or knowing the loss or preparing trade account, profit and loss account, how many things they say. But today, at present, most of the students who find it difficult, okay, expenditure, I know which expenditure to take. Buying machinery is also an expenditure. Buying plant also machinery, printing is an expenditure. Buying furniture also an expenditure. Buying materials also an expenditure. Paying salary is also an expenditure. Paying building rent also expenditure. Paying electricity bill also expenditure. Paying a salary also an expenditure. Right, all these expenditures are there. Which expenditure should I take in? After last account. Alright, that is the important thing. So therefore, I was telling you, this going concept is the base. Since we talked about the business will run for an infinite period of time, one should know how to compute the income. Since it's running for a longer period, for infinite period, one should know to classify the expenditure what we are incurring in three ways. One is the revenue, one is the capital expenditure, another one is the revenue expenditure, another one is deferred revenue expenditure. Now, coming to this particular capital expenditure. Capital expenditures are those expenditures which are incurred only once in the lifetime of the business. These are the expenditure whose revenue will exceed for more than one financial year. To repeat, capital expenditure are those expenditure whose revenue will exceed for more than one financial year. This expenditure which are incurred only once in the lifetime of the business, but using this expenditure on these assets, okay, we are going to earn the profit. That is the meaning of capital expenditure. It's a one-time investment. When you buy land and building, the one-time investment. When you buy plant and machinery, one-time investment. When you buy furniture and fixtures, one-time investment. And will benefit will exceed for more than one financial year. Now, today purchased a building means the building value will for more than 100 years. So its benefit will be more than one financial year. Any assets whose benefit exceeds more than one financial year, that type of assets are called the fixed assets, that type of assets are called non-current assets, and that type of assets on which you invested money are called capital expenditure. Therefore, capital expenditures are those expenditures which are non-recurring in nature and whose benefit will exceed for one financial year. These types of expenditure we are not going to record in our income statement. This expenditure always related with the course of earning your profit, regular profit. Next expenditure. Next one is the revenue expenditure. These are those expenditures whose benefit will not exceed for more than one financial year. These are those expenditures whose benefit will not exceed for more than one financial year is called the revenue expenditure. Say for example, your electricity every month you are paying, salary to employee every month you are paying, building rent sometimes you pay every month. These expenditure are paid every month and throughout the month, by incurring this expenditure, you are earning regular profit. These are called revenue expenditure. Therefore, I was talking to you, this going concern concept is the only concept which made a base to classify this expenditure. Otherwise, you wouldn't be able to prepare the trading and profit and loss account and the balance sheet. This expenditure, this particular concept only made the expenditures to classify these three types. Okay, read your mind was not so far only told to one more way in time, like not tell anything about it. One is the capital expenditure, another is revenue expenditure, third one is a deferred revenue expenditure. Deferred means postpone. People which means deferred means postponing. Tomorrow never dies. Tomorrow never comes. You will keep postponing the payment. Tomorrow never comes. You will never make a payment. And you could not make also very minor payment will make. Well, one of the important example I will give you the advertisement. Advertisement is called as deferred revenue expenditure or deferred revenue expenditure. Why means the advertisement which are incurring 1,000, 2,000 crores to earn the profit that cannot be written off at once from the profit and loss account. The only reason is the 1,000 crores what you invested today on advertisement overnight it will not have any impact on the sales. Overnight this advertisement will not bring any revenue to the organization. So therefore, this cannot be written off at once from the profit and loss account. That can be written off portion, 1/4, 1/3, throughout the lifetime of the business, they will write off this kind of expenditure. Say for example, your preliminary expenditure, that is established the time when you are trying to establish an organization, during that time, there are so many expenditure you have to earn. Maybe legal expenditure, maybe registration expenditure, name some expenditure before starting the business, you might have incurred some expenditure. That expenditure cannot be written out from the profit and loss account because it is not a part of your revenue. It is the expenditure during the establishment time you are incurred, and that cannot be written up at once from your profit. So this expenditure should be written up throughout your lifetime of your business. Such expenditure is called as deferred revenue expenditure. For example, your establishment expenses, your advertisement expenditures, right? Some fictitious assets are there. So this expenditure is not a part of your business, but a part of an establishment. Since it is not part of your revenue, so this cannot be written off from the profit and loss account. Therefore, dear friends, the going concern concept which made this expenditure pre-type just to make you to understand why you are preparing interest statement, you have to take this expenditure. Therefore, we have taken up the principles of accountancy. Accountancy means analyzing, classifying, recording, and summarizing the day-to-day business transaction. So to analyze, to classify, and to record and summarize, you need to follow some principles, some guidelines, some rules. You and I cannot follow some guidelines because it's a legal. It's an act which protects the interest of both the parties to the contract. If you maintain books of accounting your way, if I maintain books of me according to my way, there will not be any solution. Each one can evade the tax, and you cannot internationally do the business. So therefore, the accounting body, it may be an international accounting standard board, or in India, ICAI, which frame a set of guidelines your businessman should follow. Suppose the businessman is not following, it is no problem. If you don't follow, it is not mandatory that you should not follow. You should follow. If you don't follow, you will not have any problem. But when you are to expand your business, because I told you, at the end of the day, the objective of an organization is to maximize the profit and maximize the wealth. How will you maximize the profit running one small business inside the Bangalore? You need to expand the business. At the time of expanding the business, you have more options. In the options, there is the possibility of merging with another company, the possibility of collaborating with other international company. At that time, they will look for your income statement and financial statement. When they look for your income statement and the financial statement, it should be as par with the guidelines given by the International Accounting Standard Board or Institute of Chartered Accountants in India. If you don't follow this standard while preparing your income statement, financial statement, university, your accounts will not be accepted. Once it cannot be accepted, you cannot expand your business. Number one. Number two, while filing the income tax return, it is mandatory that we must follow double entry system of bookkeeping. Number one. Number two, you need to follow the set of guidelines. Until unless you don't follow this set of guidelines and don't file the return, it can be accepted. So this is the reason why we are talking about the assumption. The moment I open books of account, it should reflect me that okay, this gentleman, this organization is recorded books of accounts on business entity concept, and this company recorded books of accounts on money measurement concept. This company recorded the transaction based on the going concern concept. This is an assumption. It is purely an assumption. Right? So you should also follow this assumption while maintaining the books of account. Next, periodic concept. This is the immediately of the going concern concept. Periodic concept comes. The reason is, when you are making books of accounts, when the business going for a particular time, they should be on full stop. The full stop supposed to be one financial year. Start from 1st April to 31st March. The opening date and closing date should be there. Within that day, whatever the transaction you are doing, that should be recorded in different set of books. After preparing the separate set of books, then we can transfer this from other account, which I will tell you later. So therefore, this set of guidelines should be followed while preparing. So this is one of the important things to prepare to know whether you earn a profit or whether you suffer loss by preparing in a profit and loss based on the periodic concept. That means the books of accounts starts at 1st April and ends at 31st. Some of the concern we start the books of accounts on English calendar 1st January to 31st December. But for financial purpose, it must be changed to 1st April to 31st March. So this is for periodic concept. Okay. Now what I was talking about is called the accounting concepts. When you are analyzing, classifying, recording, summarizing day-to-day transactions based on some assumption. That assumption is money measurement concept. That assumption is what is called business concept. That assumption is called going concept. That assumption is called periodic concept. Then another important concept is called cost concept. The moment I open books of account, I should see that you recorded plant and machinery bought for 10 lakhs. The 10 lakhs is supposed to be cost. That means when we went to the vendor, when we bought, we must have paid 10 lakhs only. And that bill also should 10 lakhs. The reason is you are going to a vendor to buy a machinery, plant and machinery, which is says 20 lakhs. Okay. And it's your bargaining power. Bargaining power is, I'm not using the simple dictionary meaning of it, is bargaining power as per IFRS standard. Then, when you go for a business combination, there is a word called the bargaining power. When you are merging one company with another company, there is an IFRS standard 10 which you have to follow. There, this word is called bargaining power. That will come to later on. Since I know this word, I thought I'd share it so that I cannot forget. Bargaining power is also there. So when you are going there, when you are trying to bargain with that fellow, the 20 lakh worth of plant and machinery is selling it for 10 lakhs, you must record only 10 lakhs, not 20 lakhs. Since because they told you 20 lakhs, you cannot write 20 lakhs. What exactly the place where the bill shows, that will only shoot. That concept is called cost concept. Recording the plant and machinery, recording the assets at their market value. Okay. So today you are buying over 10 lakhs, means you should record 10 lakhs only. Not you cannot say, sir, it was 20 lakhs. I only bargained and I bought it 10 lakhs. That concept will not be accepted. So 10 lakhs means you are buying it for 10 lakhs only. That is called cost concept. Any transaction, any asset, you are recording the books of account on the cost, not on the price. Cost means the aggregate expenditure incurred on converting raw material to finished product before adding the percentage of profit. Without adding percentage of profit to a product, that is called cost. So that's the cost at which you should record in your books of account. That is the meaning of cost concept. Okay. Next, I go to accounting conventions. What is this convention? Accounting means, again, we already taught us. Accounting means analyzing, classifying, recording, summarizing the day-to-day business transaction. So what is convention? Convention means very simple. Customs, tradition. Somebody followed, I am also following. If you don't mind, I'll just share a small example. There was one place where the disciples were to stay and they are getting a training from one guru. So what is the job of the guru? Means all the disciples should join together early morning and they used to perform some puja. So whenever they try to do it, one cat used to come and disturb them. So what this guru used to do means, this priest used to take the cat and tie the cat to next to the pillar and they were performing this one. It was going every day morning they'll get up, they'll take bath, they'll make everything clean, and they'll sit for puja. This cat again will come and disturb them. So they should take the cat, tie the cat next to the pillar and just perform it. It was going on for 1 year. So on fine day, the priest died. Okay, when the priest died, they did all these formalities. Now they finish. Next day, they have to perform the puja. So everybody, they made it everything ready. They sat. Puja. One person is taking the lead of doing performing the puja, and they are not starting. Why they are not starting? They are searching for the cat. Madam? No?
Nothing, sir. Just I smiled. I was laughing.
Okay. Suddenly what happened? This fellow was searching for the cat because that pujari died, and this cat also died. They are searching for the cat. They did not find the cat. Since they did not find the cat, they didn't want to do it. Because the cat also died on the same day. What happened here? What I'm trying to say is somebody followed some procedure, you also follow the same procedure. That's what I'm going to talk to you today. Accounting convention means some tradition. Somebody followed some rules and regulations, same thing you have to follow. Now, one of your friends who was smiling and laughing, she was asking, sir, how you connect this with your accountancy, sir? From the morning you started classes, something you are talking and you're just like that connecting, how you connect it? Now, as I told you, these people have followed the pujari, what the pujari was doing, that's how it's died. Now they are finding the cat also died, so they don't find a cat to try to perform the puja. That is the custom they follow, they want to follow. The same thing in accountancy also they are following. Bad debts, provision for income tax. Okay, so bad debts means amount which is deducted from debtors. You might have sold the goods on the credit basis. Once sell the goods on credit basis, they'll become the debtor for you and you will become the creditor for them. So that money, or say for example, 10 lakh rupees you have to receive for selling goods on the credit basis. So you assume that 1 lakh rupees that fellow is not going to pay. The amount which is not going to pay by that fellow, out of 10 lakhs, that 1 lakh, what is not going to pay, that is called bad debts. The amount which is irrecoverable. Okay, that once when it will happen, for the time of receiving. For that, if you create a provision saying that that fellow may or may not pay, that fellow may run off, that fellow may die, all these things, assumption you are making, for that you are creating 1 lakh rupees. No. Why what you doing? Income tax provision. You do not earn the income only. You are planning to keep aside some of the money to pay taxes. Your job, your business only not guaranteed. Your income only not guaranteed. Before that only you are planning that I am going to make this much of income. Out of this much income I will keep separately to pay the tax. That's the provision. Keeping aside some portion of the profit to pay the tax. Why? You not make profit only, no? How can you pay tax? And for that, why you have to keep aside some money? There, are you following, guys? We have students. Are you following what I'm trying to say?
Yes, sir.
Somebody followed some precedent, you are also following. So it is not that you need to follow that one only. If you have any solution in the future, if you become a best accountant, big CEO, big finance officer, you think, apply your mind and check whether keeping a provision on this particular asset is necessary or not. Keeping a provision for income tax is required or not. Because anyway, income tax is not going to allow. Anyway, you are making profit or something, you will not be allowed. Because one of your friends asked me, the class, what is my cash flow statement and financial accounting, something asked it. That I'll come to later on. I will touch everybody's answers. So, when that is the case, when you are prepared to cash flow statement, this provision will not be allowed. Another thing, depreciation. Depreciation is not at all expenditure. Depreciation is not at all expenditure. Then how can you treat? Okay, anybody can say, is there anyone to argue with me? I'm telling this depreciation is not an expenditure. Is anyone to say with me? Say the meaning of depreciation.
Depreciation is if you are buying some vehicle after years, the value will be lesser.
Deterioration of the product.
Decrease in the value of our assets.
Deterioration in the value of a product or asset or service.
Sir, we have used the service, so I think it will not be accounted as expenditure.
It is the expenses we use it to buy the product, sir.
Can you repeat, sir? Can you repeat?
So
Sir, it's the
depreciation
difference
should
between
not be
the
accounted
initial
as
and the
expenses.
1% time, 1% time. Depreciation is a
sir, initially what we paid to the goods and now what we are selling that goods, the difference amount will be always depreciated amount.
very good, sir. Excellent, sir. Excellent. Any other answer?
Deterioration in the value of a product.
Okay, right. So, all of you are telling the correct answers only. Now, come to the next question. If this is an expenditure or a loss?
So it is not an expenditure. We have already bought it. We have accounted it for that, and then we have used the service of that thing, service, and profit has been made out of it. So the depreciated value should not be accounted as expenditure.
Then what can be the loss?
So it's not a loss. Also, we have taken profit out of it. We have used the service.
So depreciation is applicable only on the capital goods, and that we are going to use it for the process or production of the compounds. So in one or the other way, it is passively benefiting us for running our organization.
Now, is anybody can, other than that madam, is anybody to say this is an expenditure or this is a loss?
So depreciation is expenditure, sir, but when you are selling it,
That's what
that
the
time
answer
you-
is. Muka.
Depreciation is decrease in the value of tangible asset, whereas amortization is intangible asset.
Okay, sir. Now, my question is the loss or income, sir? Is it loss or expenditure?
Depreciation is an expenditure.
The Muka is telling expenditure. Go, Gopinath. Is it expenditure?
Expenditure only, sir.
Excellent, excellent. Shivi madam, both of them are telling expenditure. Only you are telling it is not expenditure.
So depreciation, I don't think it's an expenditure because like depreciated we have all means like we have used the service of that item. We have bought it to some cost, maybe a machine. I have purchased it for some lakhs. Then I have produced goods out of it. So I am also accounting profit from that machine. And then that value get depreciated. Machine will get depreciated value. So the depreciation cannot be an expenditure.
Sir, Muka, sir, what you are telling, sir, madam is telling it is not expenditure. You are telling expenditure.
Sir, you only tell, sir.
Hi, sir. When you're selling the asset, that time you will incur loss.
Malia, you try to say something? Yeah.
Yeah, so sir, I'll give one example actually to Shivi. Like if we purchase one drone, yes, actually I'm into the drone industry. So like if you are purchasing one drone and drone have specific life hour. Just I'll say example of motors. Motors have specific life hour. So you are saying that drone is making good like drone up to the 500 hour, up to the 1000 hour. Drone can be fly and it can give that whatever service inspections, monitoring, whatever to that company for a year or 6 months. But when after the running of the 1000 hour, when we are about to, I'll say, retired or about to like depreciate that thing, we have to again invest the money in terms of capital. So now we need to buy or we need to get something from capital from finance. So like if we are saying that my asset is not like expenditure, and then I believe like getting the same capital amount from the finance, they will say like then how can we justify it is not expenditure? So I am also like stand with that whatever asset if we are degrading or if we are like depreciating. So whatever the cost we can.
Finally, you're trying to say that it's not expenditure, correct?
Yeah, sir. Means no, it's kind of
Done. Any others wanted to support or say any other answer?
Yes. Basically, it's a kind of a loss. You paid 1 lakh to a product, and you will be depreciating after some time to 60,000. So that 40,000 you are losing on the value of that product what you initially put on. So I would like to put it as a loss.
Very good, excellent, super. Right, congrats. Next. Madam, three people are telling this expenditure only. You are telling.
Sir, but nobody is considering the profit you made out of that property. So how we can consider it as a loss? Sir, you only explain, sir.
I will not. I will explain. That is different issue. But you have to depend these three people who are telling the answer. No, you are asking me only to see the answer. What answer I should tell? You should understand.
Sir, we have already accounted the cost of the item initially.
I think I'll go with these three people because they are telling expenditure. Correct? No. Sattu sir.
Yes, sir.
Sir, you are not telling anything.
So I think it is loss only, sir.
Very good. See, you got one more partner I got. He say it's a loss. Very good. See, madam, 4 people is there with my side and you are only one you are fighting. You also agree with them. Then we will discuss.
Sir, you explain then.
I will explain. You just any one thing you take side, any one side you
No, sir, I will still go that it is not a loss. We have already accounted the value, sir. So depreciated value is meant to be depreciated. We have taken the profit out of it.
Madam, when you are purchasing that itself is an expenditure, no, madam. When you are buying the plant and machinery.
Yes, sir, yes. Means we have already accounted it initially.
That itself is expenditure. Now, depreciation, how can you say it's not expenditure, madam? Just agree, then I will go ahead. Otherwise, I will go for discussion again. Bagi, madam. Bagi. Madam, beginning she said there, afterwards not impacted there. Amisha?
Yes, sir. Is it a capital expenditure, sir?
That we will see. First of all, I want to define first which expenditure are loss. Then we will go for a capital expenditure, revenue expenditure. Yes, Amisha.
Loss only. Loss only, sir.
Very good, excellent. Bagi?
Loss, sir.
Loss. Yes, only one last chance. Madam, for you also one chance and for others also one chance.
Expenditure, sir.
Muniratna, yes, expenditure, right. You stop here because madam is more excited. Madam, before madam changes her mind and says,
Right, sir.
You are still standing, madam, that same one they are going to change.
Yes, sir, I would like to make my stand only. Anyways, many others.
Okay. Now, along with the CV madam, the rest of them, they told the answer. I would request them to open your, I think, sir, video for once again. Including that madam, those who told the answer, please open your videos. Open your videos for once again. Yeah. Bali Mode and Bagi. Sandhu. Muka. Everybody should switch on your videos. Please switch on your videos. Yes. Very good. Very good. Shubham Pandey, sir, you did not tell the answer. I cannot hear you, but my.
It's a capex expenditure.
A capital expenditure, very good. Gopinath? Okay, these people are told the answer. Chandu?
Sir, it is expenditure only, but I cannot say whether it is capex or not.
Okay, just open the video, sir. Open your video, sir. Open your video, sir.
Sir, I'm taking my breakfast and answering. Is it okay?
No problem. We'll be happy if you have breakfast. I don't mind. We had our breakfast. So no problem. You can open for 30 seconds. That's all. Then you can close back. Okay. Chandu sir, you are not opening your videos. Right. Both of them are not opening again. Right. If you Molly only opened, Sumuk. So if you don't mind, those who open the videos, please give a round of applause for Shivi. What Shivi said is the perfect answer because it is not an expenditure, it is not a loss. It is purely a provision. Provision means savings. The moment I say from IBNOU they are going for tomorrow or next month industrial visit means out of your total budget you keep aside some money, no? You go for that visit. Maybe you may spend or you may not spend. That is different issue. Sometimes you may spend, sometimes you may not spend, you will come back. So to meet that expenditure, you may keep aside some money, right? That is called provision. So depreciation is also something like that, where you keep aside some of your earning in the name of a provision and the name of a depreciation, which can be deposited in the bank, which can be invested in other realizable assets. So the day when the assets, because one of your friends, you can switch off now. You can switch off your video because once again, thank you very much, madam. So many, madam. Thank you. Congrats. I like this kind of energy. Others also said the answer and don't feel bad. Shmuka, thank you very much. So this is the way I will teach. I may somebody get upset, maybe disturbed, but this is only the interactive session we should learn. So don't feel bad that, like this way I'm asking the question. This is to enjoy the class. Totally to enjoy the class I'm taking because 2 hour session, if I take, it will be boring for you. So I thought to make you happy and to appreciate the right answer. So I will do like this kind of activity so that 1, 2 seconds, 2, 3 seconds, we can refresh our mind. So if I hurt anybody's feeling, extremely I'll do hold my 2 hands, I'll beg you pardon if I hurt anybody's feeling. So with this, we'll come back to the answer. It is purely a provision. When you are keeping aside some money to meet tomorrow's expenditure, it is well and good plan. So that expenditure you have to meet. For that expenditure, you cannot beg and borrow to any financial institution. You cannot go to any financial institution. Okay, I was using this machinery. I made so much profit. Now this machinery has become a scrap. I need to replace. But to replace, I need 1 crore rupees. Please give me. That fellow very, very happy to give 1 crore rupees. Even if you ask 10 crore, also will give it. But at the end of the day, throughout the life of that asset, you should spend a sleepless night to earn the profit to pay that fellow. Which fellow for whom you borrowed the money in the name of a loan. So one important thing is, why we are keeping aside this money in the name of a provision? Provision means general English meaning is savings. It's kept aside to meet the day-to-day expenditure. I mean, to replace this particular asset, because fixed assets I told, it's bought only once the lifetime of the business. Throughout the lifetime of the business, they are going to use that asset, they are making the profit. For human being only, there's a deadline, there's a certainty there. Same way for this machinery also, there's no deadline. One particular day that will become scrap, that will become useless. So to further to manufacture, to earn the profit, you need to replace the asset. To replace the asset, you cannot invest further. You cannot go to the investor saying that you please invest the money, I need to buy the assets. Or you cannot use the capital to buy one more assets. So, and again, you cannot go to the bank to get the loan to buy the replace the assets. A prudent person, a financial manager like you, can decide what is the percentage of money I should keep aside for this many years so that at the end of the day, I can replace the assets without anybody's risk, without anybody's help. Is called the depreciation. Got my point? Now, whatever answer you said, perfectly correct, 100% some of it is gradual sinkage values also due to wear and tear, due to continuous use, the assets values are decreasing. That madam also defending madam's answer with a proper way, others also be telling the answers. But I'm very happy that you never referred any book. Otherwise, some people will search in the Google, they would have given the answer, but you are so honest, so dedicated, and you are so much contributing to my session and asking the question. I'm very much happy. So this is the concept of depreciation is a provision which you should keep aside. So from where will you keep? So this is another practice made by the businessman. This is called tradition. This is called a convention. So this concept, this tradition followed by somebody else, we need to follow is the question mark given to you. You just apply your mind, think it in the later stages and come out with a good solution for the economic well-being of our nation. Right. So with this, okay, we are talking about the accounting convention. So in that I was talking till now the meaning of accounting convention, the convention meaning. I want to satisfy a convention. I'm sorry, in between students are coming and calling me. I'm attending the call because otherwise, if I don't attend the call, no, they may feel bad. Sir is not attending the call. The signal coordinator is not good. He's not responding. All these kind of things will come by balancing both. And I'm supporting you guys only. I'm not having any personal phone here. So like that. Anyway, so accounting convention. Now, till now what I explained is about convention. Convention means tradition. You understand meaning of tradition? This much time I was giving you the example and explanation. If you have anything to share with me, I will give 30 seconds time to share about the convention meaning of what I explained. You can also share with, I can also learn from you. Any answers? Convention means you understood, right? So there are different types of convention. One is conversion of convertism. Conversion of convertism. What do you mean by this? I'm asking one question. Vinita madam is asking, sir, who is recording the classes? Please pause the recording. Madam, the joke of the day, madam. I'm seriously asking the question. Madam is sending a message in the group saying that who is recording the classes? None other than me only, madam. I'm only recording. Any objection? Not responding. Okay. Anyway, conversion of convertism. Conversion of convertism means provide for all expenses and losses. Don't anticipate any revenue. 2% do not understand. I can read your mind wise. This fellow is showing up too much in accountancy. Am I right? Conversion of convertism means provide for all expenses losses. Don't anticipate any profit. That is the meaning of conversion of convertism. That means to say, as I told you, depreciation is not an expenditure. It is not a loss. Very good. And it's a gradual shrinkage in the value of assets due to wear and tear, due to continuous use. You are incurring the expense. For that, you need to compensate. One fine day, this particular asset will become a scrap. So to replace that assets, you are maintaining some portion of profit from as a profit from your profit. So to meet that one, whatever savings you are maintaining, it is perfectly right. This is you are providing for future expense losses. That is 100% correct. But anticipate don't revenue. Don't anticipate any profit. Then don't judging by you might have knowing it. One person manipulated the books of accounts. Satyam computers have you heard about?
Yes, sir.
That's why you have this particular principles of accountants only. He showed in books of accounts as a huge profit. Huge profit he showed. But he anticipated that profit. He anticipated that profit, this much revenue, this much sales I made, this much payment I made, this much receipts I made, he showed in books of accounts. But practically when he was speaking, he never made any revenue, only expenditure was there. Because of that only, he came openly, he accepted his mistake and he underwent so many punishment. Now there is no more certain computer that is now in different companies they are running. That means say, you can expect losses. You may say that tomorrow I'm going to incur expenditure of 100. So today you can keep that 100 rupees separately because tomorrow you want to keep it. That is not wrong. That is not providing for small expenditure. But you did not make any factory matches, you did not make any sale, you did not make any revenue. How can you expect that tomorrow I'm going to earn 1000 rupees profit? Recording 1000 rupees profit is not wrong. That's what I'm saying. Provide for all the expenditure, but don't anticipate any revenue. Don't record any revenue that you are going to earn. That is the meaning of the conversion of convertism. Next one, conversion of materiality. See, in another tradition concept is they telling the transaction which are very significant in nature, only that transaction you record, other transaction you don't record. Because the books of accounts will not be sufficient to record those transactions which are insignificant. So, for example, some visitors are coming to your office, you are offering them tea or some snacks. In what way you will afford that one? It's a very small expenditure. Suppose there is an office boy whom you are sending, go to some sales tax office, income tax office, pay, submit this particular file and come back. For that hardly 50 rupees is the expenditure, transportation charges. How will you record this transaction? If you keep recording this transaction, the book will not be sufficient. And buying a stationery, you may buy a stationery per month 600 rupees or 1000 rupees. What you record? Now, one more I shall ask one more question. Is the stationary's assets or liability? Is the stationary assets or liability?
Liability.
Super, madam. Who is that?
Consumable, sir.
Super. Chandu sir? And Baki madam. It's a liability, no madam?
So it is consumable.
Consumable. What do you mean by sir? Consumable mean?
It can be usable for the organization.
So my question is assets or liability only, sir. My question is. In this any one to only one.
So it is an asset.
Ishka madam, huh?
Asset, sir.
Oh, super madam. Very good, excellent. Chandu sir.
I think it is asset only, sir.
Very good. Baki
It's
madam.
going to be asset.
Baki madam. Gopinath sir.
Sir, it's an asset.
Very good. Sumuka sir.
The asset, I think.
Very good. Now I will tell you. Whatever answer you have said, exactly wrong. And you should clap me. Sir, you're asking the question, when you say the answer, you are laughing and you are clapping, then finally you are saying it is wrong. And some students, they said miscellaneous expenditure, that is also wrong.
It is an expense.
Now I can hear your mind was, sir, if it is not an asset, it is not a liability. What is that? You explain me, sir. Now I will explain. It is not an asset. If it is an asset, it should have been shown in the balance sheet. Have you seen any balance sheet with the stationary word? You cannot see any word called stationary. Because as Chandu sir said, it is usable. Once you use it, it will exhaust. It will not.
Sir, it is an intangible asset.
No, man, it is not asset only, man, first of all. It's not at all an asset. It is purely an expenditure.
Sir, we can say something similar like the indirect expense, like what we usually recorded in
You can say, now
income and
I've not started, okay, I've not gone to that level, whether it's a direct or indirect. Now for typing, we're talking about expenditure only, sir. That level we'll discuss. So in the beginning stage, I need to make you sure that to classify this one, because I use the word analyzing, classifying, recording, correct? The title, that I'm justifying now. Just
Because-
then I'll go back.
because like it means like unnecessary of running a business, but can't be directly tied to cost of product or service. So like that is the reason. Even stationary.
Your answer is perfectly correct. Your answer is perfectly correct. The expenditure and that indirect expenditure, what you said is 100% correct. But now my question is the expenditure what? Okay. Now, next one, what I was telling, yeah. Stationery is an expenditure and that expenditure should be written off. Because if you treat it as an asset, at the end of the day, you are using the paper and pencil. Pencil will exhaust, pen will exhaust, paper will exhaust, but to show as an asset, that the asset should exist. Land and building will exist, plant and machinery will exist, name any assets other than stationery are existing. So that will be shown as an asset. Maybe current assets or non-current assets is secondary. But as an asset, it should exist. The stationery will not exist. So therefore, it is not an assets and it is not a liability. It is an expenditure which should be written off from the profit and loss account. Is it clear? So this is a stationery. So now, this stationery every month you are buying. Every month you are buying. Every time the guests are coming to your office. Every time you are to meet the guest. So this expenditure to keep recording, the book will not be sufficient. So therefore, this type of transactions are insignificant in nature. This transaction is telling you need not record in the books of account, you just record and write off. Today you pay the stationery bill, tomorrow you debit to the profit and loss account, close that account. Don't make that account exist. So like this, there are so many accounts which are immaterial, which are insignificant in nature, which you are not supposed to write. So this is another important accounting convention.
Sir, we are going to account those things then, sir.
So that's why
It's also expense.
the stationery you are buying for 1,000 rupees today, right?
Yes, sir.
So in the end of the year, you have to write off. Financially,
Okay.
you buy the stationery, pay the account, close that account. It will be cash flow. One of the students used one word called interest system. They used one word impress or impress. Impress means in petty cash book or everything cash book you write off. Like stationery fee.
Right, sir.
And at the end of the year you can make the no stationery. Like that you debit the stationery account with 1,000 rupees or 10,000 rupees or 20,000 rupees. Like that we can write off.
Got it, sir.
So this is another important accounting conventions. One is called conversion of convertible. So that is provide for all expenses and losses. Don't anticipate any revenue. That means to the ordinary course of business, you are investing the huge assets, which that huge assets can be used throughout your lifetime of the business. One day that will become scrap. To replace the assets, you need to maintain some provision in the name of a depreciation. The depreciation is a provision. There is no actual inflow and outflow of cash taking place. That is called conversion of convertism. Next one I was talking about conversion of materiality. In the books of accounts, the another assumption is that tradition is that the transaction which are significant in nature, only that transaction we can record, other transaction we will ignore. Is it clear, student? Then conversion of full disclosure. The next important point is conversion of full disclosure. That means when you are maintaining the books of account, the moment I open your books of account, I should say at most good faith. That means whatever the figures and facts we disclose in the books of account, it is at most good faith. That means there should not be any manipulation. There should not be any. That's what I gave an example. No, you went to the vendor to buy a plant and machinery where he quoted 20 lakhs. You bought it for 10 lakhs and you paid only 20 lakhs. You cannot write 20 lakhs here. I'm sorry, the vendor is telling 20 lakhs, you bought it for 10 lakhs. Since you bought it for 10 lakhs, you must write at 10 lakhs only in books of account. That is called cost. You cannot write 20 lakhs. First of all. Second one, you did that with 20 lakhs. That means that you are manipulating the books of account. You paid 10 lakhs and you are quoting 20 lakhs. That means you are not at most good faith. This at most good faith is one of the important principles of insurance company. Insurance, when you are taking insurance, about subject matter may be your life insurance, maybe your medical insurance, maybe a dog insurance, maybe an animal insurance, whatever that is called subject matter. The insurance on which you are taking, the subject matter should be disclosed at most good faith. You should disclose the fact and figures about subject matter of the insurance. Suppose you are insuring your life, so you should disclose the exact name, your father name, your age, your any illness, everything you should disclose at most good faith. Then only anything, certain things happens, the company will compensate you. Otherwise, the both if they found that you are guilty, you did not disclose at most good faith the facts and figures about the subject matter, you cannot be paid the compensation. Similarly, in financial accounting also, there is one concept called convention of a full disclosure. That means your finance, your business, you need to disclose the facts and figures at most good faith. That is to protect the interest of both the parties to the contract. What is contract? Any idea about the meaning of contract? It is agreement enforceable by law. If everything is perfect, law can protect you. Then we can go to the law, law will protect you so that you will be not lost in the business. That's why the subject matter should be disclosed as most good faith. Right? So this is the accounting conventions, accounting concept and accounting convention. Accounting concept is assumption. Based on some assumption you are recording, and convention based on some tradition you have to maintain the books of accounting. Therefore, the title was, what is that? What is the objective of financial accounting? We discussed the one and only objective of financial accounting is to measure the financial performance of an organization. How will measure the financial performance of an organization? By preparing an income statement and by preparing a financial statement. By preparing these two statements, how can you prepare? By maintaining a bookkeeping. The bookkeeping can be maintained in two ways. One is in the single entry system, another one is the double entry system. Now, to maintain this also, there is a principle. Principle is a set of guidelines. A universal guideline should be followed by any businessman, every businessman. That is further classified into accounting concept and accounting convention. The accounting concept means it's an assumption. Accounting convention means it's a tradition, custom. Somebody followed, we are also followed. All this one by one, what I explained is the principles of accountancy. Definitely, there will be one question for 20 marks. Explain the principles of accountancy, or what you mean by accounting concept, or what you mean by going concern concept, or what you mean business entity concept, like that will be expected for one question. Now I'll stop here for some time. If you have any doubt, we can discuss, we'll check out, we can go further. Since non-stop I was telling you, maybe some might have heard. Anything is, whenever you want to talk, don't want to talk, you can share in a message. You can share in your inbox. Anything discussion, any discussion? At 12 o'clock, sir, please stop the class. It's only 2 hours. Anybody is there, that also you can put in a message. Anybody is there? Nobody's talking. That can only what they're talking, or nobody's talking. Anybody tired, huh?
Also. Hi, sir. Sir, I have one question actually.
Hi, sir. Please tell me.
Sir, as like you mentioned, like if any company, in company there is a one called overhead budget. So I'll say if we are doing something for a printing, as a something, or shipping, like sending something via shipment or something. So those kind of charge, how in company like they should define?
That is called a revenue expenditure. You can take it to profit and loss account.
Okay.
Printing is also our revenue expenditure only. Printing is in a capital asset. That for renewal, repairs, renewals are called revenue expenditure. Suppose, say for example, you are having plant and machinery that is producing 1,000 units per month. In that production, if you make some technical changes in that particular machinery, and because of that, if the production is increased, that can be called capital expenditure. A simple example, when you are going to petrol bunk, maybe having two there or four, I don't know. Which are automobiles, you go to the petrol bunk. If you go to petrol bunk, there are two types of petrol. Now only one petrol only. That fellows are making two different. One is power petrol and another normal petrol. Okay, normal petrol will cost less than 1 rupee, 10 rupees compared to the power petrol. But they will tell you that if you use the power petrol, it will give more mileage. If your bike is 50 kilometers, in normal petrol, and if you use power petrol, there is 60 kilometers. So because of that lubricant, if your mileage increases, that is called capital expenditure. Okay, in the same case, the machinery, when you are using plant and machinery, a small technical change if you make to the for the increase of your production, that is called capital expenditure. But for repair, for renewal, these comes under the revenue expenditure, including the shipment expenditure, what sir was telling. Right, so next.
Got it, sir. Thank you very much.
Thank you very much. Right, any suggestion for my class so that I can, this is only one session I will take because the professor is not there, so I thought I don't miss you students, so I thought I cancel all my work, I just took 1-2 sessions. If you give me your suggestion for my improvement, I can change. Because still now I not started classes. I'm just briefing you the both of things. Give any suggestion, I can check.
Sir, your class is nice, sir. Sir, and one more query, sir. Yesterday we haven't gone through any classes, sir. Only 10 to 12 class only we have, sir. Actually, yesterday classes were there, no, sir. First from 10 o'clock to evening 8 o'clock we have classes, sir. In that only one class was organized, sir. 10 to 12 class was organized.
Because no matter what happened, no. Some of them are gone for your students only. They are traveling because of the long weekends. So they are sending the message, sir, and you have class next week. So I cannot say no.
Recording
Because
stopped.
some of them are not responded properly also.